Hey guys, Q here from ayantitrading. If this is your first time watching this video, please hit the subscribe button. I am mainly an options trader. I use Robinhood, I use Thinkorswim, and I use TradingView mostly to analyze all stocks. If you guys don't know the site TradingView, I highly suggest that you get familiar with it. I actually have an entire video breaking it down. So if you're interested in that video, please hit the subscribe button. You can look through my videos. I'll actually attach a link underneath this video so you can go ahead and view that. I break down TradingView entirely and show you how to use it. Now, TradingView is not an actual execution website. It just allows you to view charts as would FinViz or stocks to trade or anything like that. Now, let's go ahead and get started. I'm going to be talking to you guys about options trading on Robinhood. I recently made $800 off of a $2,000 options trade on a stock called Hexo. Hexo is one of my favorite stocks in the past month. I discovered the stock before it actually became popular, right before its earnings and right before its new acquisition of New Strike brands. And I was lucky enough to get in before the entire hype came about it, and then the hype came up and the stock rallied. So I'm going to look up the ticker symbol Hexo, and I'm going to show you my history here. That way you guys can see proof. Let me see where I can find the history. I usually trade on my phone. So history, here we go. So I'm going to show you more. So purchased the stock February 28th. I bought 80 call options. Now anybody watching this video is probably like 80 stock options at 0.25 cents, which is $25. It was only $2,000, so I did not mind purchasing that at all. And I ended up selling today actually at $2,800. And I'm gonna show you the pain that I went through before I actually finally committed to selling this, because I'm going to show you the chart for Hexo when I purchased and how I am doing right now. So I purchased the stock right around here, actually right around here, and I purchased calls out till April 18th. So anytime that I purchase a large amount of calls or puts in a stock that I believe in, I always give myself a little bit over a month, because every day that you get closer to that expiration date is another day that the option gets less and less valuable, because all options have a expiration date. And so I went through entire pain right here as the stock kept going down. But if you are confident in your trades, then you should know that even if the stock is going down, if you are completely confident that it will go back up as long as you've given yourself enough time. That is not to be mistaken with cutting your losses. If some terrible news article came out about Hexo and they had terrible earnings, then yes, I would definitely get rid of my trade. But if I believe in the stock and I actually held through earnings, which is a risky move, but the reason why I held through earnings was because New Strike Brands was acquired right before earnings, a day before, and Hexo buying New Strike Brands and releasing that article before earnings gives you confidence that their earnings is actually going to be great, because they were able to spare enough money to acquire another company right before they even released their earnings. So that was a really good sign for me as an investor. I actually held through earnings, and now the stock today is trading at $6, and the high was at $6.66. Now, I had shouted out this stock to my trading group right when I purchased it, and I hope some of them got into it and actually made their profits, because I do see Hexo doing really big things in the future. However, I do expect a pullback. But anyways, let's go ahead and get into the options side of it and see why I chose that option and how it is going to play out in the future. So as you can see, the option that I had was this one right here. It had a strike price of $7.50, in which I do believe Hexo is able to get to, but I was happy with my $800. It's almost 50% return. I believe that's 40% return on my initial investment, and I wanted to pull out. I did not want to risk my money anymore. Let's go ahead and click on it and see further details. So if you're not familiar with options trading, I'm going to go ahead and explain some of this to you. The bid, the ask this is the spread. Right in between the 0.35 and the 0.40 is something called spread. So you want something that has a tight spread when you're buying an option or a stock, because the bid is how much people are willing to buy for, and this is the ask, is how much what people are willing to sell for. If there's a large spread, that means the options price is going to be jumping up and down sporadically. You're not going to be really getting a solid up and down movement per dollar move that the option has. And then you get into the Greeks. I chose this specific options because theta is so little. Now, theta is time decay. So as you get closer and closer to the expiration date of an option, there's something called time decay, and theta represents that time decay. You want to multiply theta by 100, and whatever that number is, that's how much you're losing per day. And as you get closer to that expiration date, theta also goes up. I'm going to show you an example. Actually, April 18th would be the closest expiration date for Hexo, so I can't really show you a different example. But delta and gamma were also pretty high. If you want to learn more about delta and gamma, please leave a comment below. Feel free to message me or follow me on the Instagram that I post below. DM me, and I also leave my email. I'm going to be releasing an entire options trading course that will teach you everything you need to know about options, single leg options, and whatnot. And then there's also puts that you could play in options, but I chose this because the strike price seemed attainable. I definitely read the technical analysis and I knew that it would eventually break out. Let's go ahead and go back to tradingview.com, and I'm going to show you the technical analysis that I had executed on Hexo for me to know that it was a good buy. It's actually fairly simple. So this was Hexo. Let me move myself out of the way here. And let's go ahead and go into its 1 month chart, 3 month, and here it is. So I actually drew this resistance line for me to spot the breakout. But prior to drawing that, I had noticed this channeling down pattern that Hexo was carrying through, and eventually I noticed that it was trying to break above. Sorry, this is acting crazy right now. I'm not sure what's going on with it. This is a clear channeling down pattern with an attempt to break out above resistance. And so you can see Hexo has been trading within these in the past month. And finally, it caught some great attention after. So as you can see, Hexo has been trading between this channel for the past month or so. And it's finally catching a little bit of tension right over here because of its earnings and then its new acquisition. And so I had drawn out this little U looking shape because I knew that this was the time that, considering it hit the bottom and then it jumped back up and now it's consolidating between these lines, I knew that there was going to be a breakout coming, and it was being held above that 9-day moving average throughout this time. And so I do expect Hexo to have a very dramatic pullback soon, considering of how high it's riding in the RSI. But I purchased options on this because I was confident that as soon as this breakout happened, considering the price of the stock and the volume it was trading at, as soon as I saw that there was a spike in volume through the days after its earnings, I knew that it was a good stock to hold because it would rally much more as there's more and more news articles that come out about it. So anyways, I really hope that you got something out of this video. This is just meant to show you a little bit of options trading on Robinhood, and explain how I made that $800 trading options on Robinhood, just trading Hexo, just one simple stock. If you guys have any questions for me, please comment below. Now, Robinhood is, I'm going to make a disclaimer, Robinhood is a good platform for a beginner. I personally use Thinkorswim. I only have a small fund in Robinhood, and so if you do want to have very large trades, I do recommend that you do them on a different platform, or perhaps analyze the stock on a different platform and then execute on Robinhood. Anyways, guys, I hope this was helpful. Please hit the subscribe button, and we'll see you guys next time.